Experts warn of more turbulence when flying due to climate change in the wake of the Singapore Airlines incident on Tuesday night, which killed one man and injured 70 others. Telstra's share price tumbles further amid fallout from plans to sack 2,800 employees. And Melbourne and Sydney ranked among the best cities in the world to live. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Thursday, the 23rd of May, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, you have an interview coming up after the show with Elizabeth McIntyre, the Chief Executive of the Outdoor Media Association.
Otherwise known as the OMA. It's really fascinating. So outdoor advertising covers all sorts of things. I mean, billboards and buses and stuff like that, but also when you're filling up your petrol tank and you're watching the videos on the petrol bowsers, it covers that as well. So we talk about the growth in outdoor advertising. Certainly, the growth is outstripping anything we're seeing in many of the more traditional forms of media, if you're thinking newspapers and magazines and radio and free-to-air broadcast. Why it's doing so well and the future for it. It's a really interesting chat with Elizabeth.
Those petrol bowser screens, they would have to have the most captive audience around because you cannot go anywhere. You cannot do anything. You're not even allowed to use your phone while you're filling up petrol. So you've got to look at something, and that screen's right there.
I thought exactly the same thing, Michael.
It is a good one, Sean. It is coming up after the show. Stick around for that. The main story this morning, experts are warning of more incidents like the one on Tuesday night when severe turbulence on a Singapore Airlines flight killed one person and injured 70 others. This is a truly horrifying scenario.
It is. Researchers expect turbulence to worsen because of changes to weather patterns caused by climate change. A series of studies has failed to pinpoint the exact relationship between climate change and turbulence on any specific flight, but they do show that climate change will, or probably already has, made turbulence worse, according to a report on Reuters. While the exact cause of the turbulence on the Singapore Airlines flight isn't yet known, severe turbulence can be very disruptive, obviously. The US Weather Service defines extreme turbulence as leaving an aircraft practically impossible to control. Now, it is rare, and while it almost never endangers aircraft, it is the leading cause of non-fatal injuries to passengers and crews, according to the International Air Transport Association. 56 Australians were among the 211 passengers and 18 crew aboard the Boeing 777 London to Singapore flight, which hit severe turbulence over the Irrawaddy Basin in Myanmar on Tuesday night. One passenger tragically died from a heart attack, while 70 others were injured, including 8 Australians. The aircraft was cruising at 500 knots at a height of 37,000 feet when it encountered the turbulence. It initially climbed pretty quickly, about 400 feet, then dropped about 400 feet. Once control was regained, the plane then descended to 6,000 feet in about 5 minutes and diverted to land in Bangkok.
Sean, are the passengers eligible for compensation, particularly those with injuries, I suppose, and also the family of the 73-year-old Brit who died?
Yes. Well, under something called the Montreal Convention, Singapore Airlines is liable for accidents, which can include turbulence, on international flights, regardless of whether the airline was negligent, according to a report on Reuters. If passengers file a lawsuit, the airline cannot contest damages up to around $175,000. If a passenger seeks larger damages, Singapore Airlines can try to limit liability by proving it took all necessary measures to avoid the turbulence. The size of damages often comes down to the country where the case is filed and how the legal system assesses the amount of compensation. For example, US juries have awarded passengers more than $1 million for emotional trauma of severe turbulence, while many courts in other countries award far less, if anything, for similar emotional distress. So the bottom line here is, yes, there is compensation available, but it's a truly horrifying story. We have all been in that instance in a plane where we've felt turbulence and felt uncomfortable. This just must have been a dreadful few minutes for those people.
Oh, absolutely. And really, this was the story that everybody was talking about over the last 24 hours, because it is one of those things that everyone can imagine happening, and it's just absolutely horrific. Turning to local markets, how did they perform yesterday?
Well, the local market jumped on opening, came very close to a new record, Michael, then fell back during the afternoon to close flat. Or to be exact, it ended down. The S&P ASX 200 ended down 3.6 points to 7,848 points. The telcos did poorly. Telstra closed down 4%. More on that shortly. as did consumer discretionary stocks. Utilities were among the best performers. Among the large caps, toll road group Transurban was about the best, up almost 2.5%. ANZ, Fortescue, Macquarie, Rio Tinto, WiseTech Global, QBE all rose more than 1%. Wesfarmers fell back a bit, while Commonwealth Bank, Woodside and Aristocrat Leisure were also lower. Also, Lendlease chairman Michael Ulmer has bowed to investor pressure and will step down at the company's shareholder meeting in November. Also set to depart in November is non-executive director Nicola Wakefield Evans, Michael.
And Sean, there was plenty of corporate news around yesterday. You always get very excited when there's plenty of corporate news, don't you?
Very excited. Shares in biotech Telix Pharmaceuticals jumped 2.5% after it held its annual general meeting and confirmed plans to float script on the NASDAQ index. Consumer lender Plenty said net profit jumped 36% for the year to the end of March, sending its share price up about 3%. Small cap Drone Shield said a US government customer had awarded it a repeat near $6 million contract for its counter drone systems. Love that company. Its share price, it was up 1% yesterday, but it's actually almost tripled in the past 6 months, Drone Shield. And Nemoy Cotton's board has advised shareholders to reject French agribusiness Louis Dreyfus's takeover offer of 67 cents per share. The Louis Dreyfus offer price is below the 70 cents per share offered by rival bidder Olam Agri.
And what's happening in international markets?
Pretty interesting at the moment. Wall Street continues its strong run with a new record high, the 24th this year, for the broad-based S&P 500 24 hours ago. The tech-heavy NASDAQ also hit a new record for the fourth time in the past 6 sessions. Driving the rise has, once again, been the tech stocks. The Magnificent Seven hadn't been so magnificent for most of this year, and professional investors, or a bunch of them, were suggesting people get out. But in the past month, Microsoft's up 7%, Apple's rallied 16%, Nvidia's up 20%, Alphabet's up 14%, and Tesla's jumped 31%. Now, the laggards have been Amazon, which is up 3% over the past month, and Meta, which is actually down almost 4%. It's just interesting that as soon as people started saying the Magnificent Seven might be past their peak, well, they seem to be turning around and doing pretty well again. Otherwise, oil prices fell for another session, and Brent crude is now fetching around $82 a barrel. That's its lowest point in a couple of months. Gold's still trading well above $2,400 an ounce. Copper's come off a bit, but sits just below its record level reached a few days ago. Iron ore stable around $117 a ton. In crypto land, Bitcoin has come off a bit, back below $70,000 a unit, as has Ether, which earlier in the week hit a new record. And the Aussie dollar's buying 66.7 US cents, Michael.
Hey, Sean.
Michael.
Can I just give a little plug to something? It's actually more of a little bit of praise. And it's actually for us, would you believe?
Get out of here.
Because it was, of course, our Fear and Greed 4th birthday over the weekend, which was a cause for celebration. But I was doing a little bit of, I suppose you'd call it spreadsheet noodling yesterday, just a bit of poking around in some spreadsheets. And
yes.
No, I just wanted to share with you, over the last 4 years of Fear and Greed, did you know that Fear and Greed has recorded a whopping 17 million downloads?
Really?
Across that time.
Wow.
And so I just want to say thank you. I mean, this was at congratulating ourselves, which is a terribly kind of obnoxious thing to do. But really, it is to say thank you to everyone who has listened to Fear and Greed and how do they afford that and the Fast Five and the various kind of things that we do within the Fear and Greed stable. And to say thank you for listening and thank you for spreading the word, because that's really key to it all, isn't it? The fact that if you enjoy the podcast, tell somebody else about it. Tell a colleague, tell a friend, force a family member to listen to it in the car as you're driving them to sport on Saturday morning, anything like that. And Sean, the most exciting thing is that in coming weeks, we will be announcing a special prize for the MIA, the most enthusiastic advocate.
The worst acronym ever.
Yeah.
However, it's stuck, and there are people out there who want a MIA. Well, no, I'm stealing your thunder here. Go on. Tell us. What is it, Michael? What is it?
It is the limited edition Fear and Greed MIA mug, which is, that is a prized collectible there. And you take it into the office and you drink out of it with pride. And when people say, what's that mug you're drinking out of there, Sean? And then you, Sean, will say, well, it's the Fear and Greed MIA mug. I got it for being the most enthusiastic advocate, the MEA, the MIA. And you should listen to Fear and Greed. And that's why you received the mug. Anyway, details on that coming soon. It feels like we've gone off a little early with that one, Sean. But just to say, 4 years of Fear and Greed, 17 million downloads. Thank you very much to everyone from listening. Thank you for indulging this little bit of navel gazing as we discuss where we've come from and where we're heading. We will take a quick break. We'll be back in a moment with the rest of the day's business news. Sean, the federal opposition has doubled down on nuclear energy, even after a CSIRO report found that a large-scale nuclear power plant could cost $17 billion and wouldn't be ready to go until 2040.
Shadow Treasurer Angus Taylor said nuclear needs to be part of the future of the energy system in Australia, while in the short term it probably will be about gas. Mr. Taylor was talking about baseload power, which is the minimum amount of power needed to be supplied to the electrical grid at any given time. In the long run, nuclear is a clean energy that can do that, the opposition claims. Mr. Taylor also said that setting up nuclear power capabilities should be commercially viable, even without government handouts. If existing sites for nuclear plants are used, that'll help drive down costs.
Telstra's share price fell another 4% yesterday following Tuesday's near 3% decline. The country's largest telco said it will shed 2,800 jobs, but investors are wary about the earnings outlook across the business.
Yes, this story is a bit of a follow-on from yesterday. We talked about Telstra's enterprise division and its consumer and business divisions all facing headwinds. It's doing well in mobiles. And on Tuesday, the telco announced plans to make how it charges customers in that area more flexible. Following the announcement of the job cuts and new rules around mobiles, investment analysts started downgrading their outlook for Telstra. Another big challenge for the group is increased competition as a result of the $1.6 billion network sharing deal between Optus and TPG, which will increase competition, particularly outside the major cities. Telstra's share price is now at a 3-year low, and investment analysts, who are basically the professionals who advise funds on where to put their money, they're not keen on Telstra at the moment.
Travel group Webjet is considering splitting its consumer and business-facing operations into 2 standalone ASX-listed companies, sending its share price up 8% yesterday.
The announcement came after Webjet unveiled a record underlying profit for the year to the end of March, which was nearly double the previous financial year, thanks mostly to an expansion of its business-to-business unit. Chief Executive John Gussix said the travel sector remains very healthy, with most of the world back to pre-pandemic levels. Webjet's Australia's biggest online travel agency, but I bet, well, maybe you do know, Michael. Do you know about WebBeds? It's WebBeds business.
No.
It's actually a B2B hotels wholesaler, so it's not for we consumers. It's a B2B product whereby a company can go and sort of get a bunch of rooms in a hotel, for example, if they've got a conference or something like that. Webjet makes 3 times as much money out of WebBeds as it does the travel agency part. Isn't that amazing?
Oh, wow.
And in fact, only 5% of WebBeds bookings are actually out of Australia. It's based in Dubai, I think. And anyway, it's a much bigger part of the business than what we all know Webjet for.
Oh, that's actually really interesting, Sean.
Yes, the inference there being many of the other things aren't. But let's move on.
Yeah, I was trying to be subtle about that. Now, Australia's largest car dealership group, Eagers, has warned that June half profits will be down 15% on last year, sending its share price tumbling 14%.
A slowdown in consumer spending is hitting vehicle sales, and Eagers has 10% of the market in Australia. Extra supply of vehicles from overseas manufacturers had led to more competitive conditions in the sector. Also, Eagers' joint venture in Australia with Chinese electric vehicle maker BYD is struggling with lower than expected returns. Now, vehicle sales are actually pretty strong at the moment. Until the end of last month, they were near record levels, according to the Federal Chamber of Automotive Industries. Problem is margins are being squeezed. Anyway, Sydney identity Nick Politis owns 27% of Eagers. Yesterday's share price sell-off pretty much took about $160 million off his stake.
Oh, ouch. Now, Ingham's share price fell 6% after the discovery of bird flu at an egg farm in Victoria.
The poultry group said no commercial broiler farms in the region were affected. Broiler. Do you like that for a word?
Yeah, haven't heard broilers since, year 10 agriculture.
Anyway, the poultry group said no commercial broiler farms in the region were affected. Agriculture Victoria was investigating the strain of avian influenza detected at a farm south of Ballarat. It's been placed in quarantine and tests on samples were undertaken to check if it's the same variant of bird flu responsible for a global outbreak impacting farms in other parts of the world. Now, those tests did come back and it isn't the same variant. Fortunately, it is the first time the virus has appeared in Australia since 2020.
And Sean, the US Congress has added Australia to the Defence Production Act as a domestic source, making it much easier for American companies to invest in Australia.
US Assistant Secretary of Defence for Industrial Base Policy Laura Taylor-Cale announced the decision at an AFR mining summit in Perth, where she stressed the importance of US-Australian defence and economic relations. She said it's only the second time the US has added countries as a domestic source, the first time being Canada in 1985. Now Australia and the UK also got admitted. The inclusion of Australia means that the US can now make direct investments in Australian companies on the same footing as it does with domestic firms.
Sean, turning to international news, New York and London are the best cities globally to live in, while Melbourne is 9th, Sydney is 16th, and Perth is 23rd best out of the world's 1,000 largest urban economies. 3 out of the top 25, that's not too bad.
That's not too bad at all. It's according to Oxford Economics. It released its inaugural Global Cities Index. It looked at 27 indicators using 5 broad categories: economics, human capital, quality of life, environment and governance. The heaviest weighting is on economic factors. US and European cities dominate the top 50 spots, according to a report on Bloomberg. New York, number 1, then London, San Jose in California, then Tokyo, then I think San Francisco in California made up the top 5. The group actually provided breakdowns for the best cities in the different categories. And when it comes to quality of life, Canberra came in 3rd.
Really?
Who would have thought? You're a Canberra man. You've lived in Canberra.
Yeah, so have you.
So have I. I was just a bit surprised when it came to quality of life. It was 3rd out of 1,000.
I think Canberra's a great place. You know what I would have loved to have seen on this list? I would love to see something truly surprising. All of a sudden, you get kind of Melbourne and Sydney on the list, and there's Wagga or something. Wouldn't that be great?
Wagga Wagga, please. Yes, that would be.
That would be amazing. Or Albury. Or, I don't know, just like pick a random, like Toowoomba. There you go.
Roma.
Yes. Next year, the campaign will be for us, Fear and Greed, to lobby Oxford Economics.
To get Albany. They may not be big enough, let's be honest.
Oh, hang on. I just realised this is 1,000 largest urban economies.
Yes.
It's not just cities in general. They've got to be large.
Oh,
well, that blows out my theory.
My
plan. Anyway, it was fun while it lasted, and I'm sorry to the good people of Wagga. I did my best to get you on the list, but just not big enough. Up next is the Fear and Greed Daily Interview. You're talking today with Elizabeth McIntyre, Chief Executive of the OMA.
Yes, sure am. All about what's happening in outdoor media. Why outdoor media? We discussed this at the beginning of the show, not just billboards and buses, but also petrol bowsers and those things, why it's doing so well.
It is up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And if you're looking for something else to listen to, go and have a listen to the weekly edition of How Do They Afford That, our sister podcast. This week's episode, which came out yesterday, features it's a special guest in the studio. Roger Montgomery joined us to talk all about investing and his principles of investing, how to spot a quality company. It is a great introduction to investing if you're only new to it, or if you've been doing it for years. It is a fantastic indicator of what someone who's very, very successful at it, what kind of guides him. So you'll find that one wherever you listen to podcasts, and I'll put a link in the show notes as well. Thanks, Sean.
Thanks, Michael.
It's Thursday, the 23rd of May, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.